Hey guys, we're gonna talk about Google. We're gonna talk about Miami development and why. We're gonna talk about billionaires first of all. There are more billionaires moving to Florida than ever before. The growth rate of billionaires in this state, not only due to the weather, that's why I moved here too, also the economics of the state taxes and other reasons. There's other billionaires here, right? And it's a great place. This is New York 2.0, is what they say, right? Where is New York 2.0? Let's see what the answer is. City. Wow. Google is not good for colloquialism. So most people moving to one county, USA, by number. So Florida had one, and it's because of the affordability. Polk County, it's cheaper and more expensive. So let's look at county. So I can't say that more people are moving to only 4 other counties grew by more people. Harris County, 54,000, 2/3 of the growth coming from births. So as many as 50,000. New York City, Los Angeles. So by birth rates, wow, that's a surprising. Legal immigration and illegal immigration too. Florida, the most populous South Florida counties, international migration by double digits. Miami-Dade County, there are almost 54,000 new residents from outside the USA, the highest in the nation, almost 40%. That's where we're at. The international migration offset departure of more than 47,000 who left for other U.S. counties. So there's a lot of people moving here and there's a lot of people leaving, which I've seen. That means, but it's still a place that you can meet a lot of people. From where I'm from, we're not even close, right? So that includes the people that are able to stay here. Why do people move out of Miami? Is it affordability? Rising costs and who's getting displaced? Climate concerns, definitely not. But let's talk about development. Development pipeline by county, largest USA. I guess that could be largest real estate development pipelines by city or county, USA. So it's almost impossible. I think Miami had maybe 12,000 new housing units, but it's still short. Dallas, 33,000 units. Miami-Dade, you see that? For new office space, planned developments, 3%. Nashville, industrial, all asset classes. Let's see if it's Miami. All asset classes. It's a tier 1 market. Dallas is too. And I would say uh Miami's real estate is substantial when compared to other ones. What about by dollar volume by city? Does Columbus have more? Columbus has mega projects. You see this? These are institutional level investors, institutional level capital developments, right? 20 billion, 23 billion, 3 billion, 2 billion. These projects more than 50 billion. Miami's not even close. What about Dallas versus Columbus? Not even close. Oh, it says, wow, that's surprising. How? Because Columbus has 20 billion. I think it's by deliveries per year or by gross square feet delivered per year. That's the thing. So while we do have mega projects, like that might be a $20 billion development delivered. Let's break it down. 50 billion in mega projects. That's what we're talking about. The largest Amazon expansion, Honda, John Glenn, Dallas is 50 billion. Doesn't have one. Thousands. Dallas wins by sheer volume, units, and diversity, but most of its projects are 500. Columbus has fewer but larger dollar volume mega projects. You're absolutely correct. Columbus beats Dallas on individual project size and could exceed in total committed Dallas and total committed if Intel fully scales, which it already is. It announced a delay, and that's a long project. What about Phoenix? Phoenix had a mega project, the same data centers, 20 billion by Intel. It's just very different. So, but it's because Columbus's governor and Les Wexner are really fighting. If you know the story of how we got the Intel plan, but if you look at Miami, we were talking about billionaires, and this is what we were looking at. New York surpasses Florida by the number of billionaires: 135.78, 135.57, 57, 135, 139, 57, 62, 9 billionaires. New York City, right? New York and Florida. What about by city? New York or Miami? I'm sure it's New York. All those billionaires live in 15. Oh, 110. Any city globally, 15. Yep, there you go. And it's because it's a global financial city, but this is 2.0, right? And I think by net migrations, could Florida pass New York in state billionaire residents? There's other people in other Florida cities, Orlando, Tampa, Naples. Notable increase from instance, millionaires grew by that. Conversely, decline in billionaire count, 10 billionaires. Some relocating, millionaire grew by that. So let's see here. Who is growing more and faster by millionaires and billionaires? It's where the rich people live. The rich people that I know, they all have secondary homes. Rapid growth. Florida is growing. Palm Beach and West Palm, 93% increase in millionaire residents. Florida, there you go. High net worth individuals driven by factors, favorable tax, warm climate, and busy, friendly environment. And that's what I've seen too. So that's what makes this an amazing development city. These are just macroeconomics that we're talking about. But if you look at the ultra high wealthy, I had a friend that moved from Dallas, Texas to here to Capital Raise. I moved from Columbus, Ohio. I still developed back home, but I was the guy that made it. And I'm going to make more money than anyone that's from my city because I took the risk. So as you're looking at capital markets, remember that if you're in South Florida, you're in the best place to raise capital. You're in the best place to start a business. You're in one of the best places to meet and network with other business owners. Okay. Land's expensive here. It's hard to develop, but if you can meet the right people, which you can, there are more billionaires and millionaires down here in South Florida than there are in most places, especially where I'm in Columbus. Look at this. How many billionaires live in Ohio? I think it's 7. This is Les Wexner. He's the one that he's developing, he's making Columbus. If I become a billionaire, I'm going to keep bringing the dollars to my family too. Mike Brown, Denise, there's a discrepancy. 7 billionaires, right, is home to them. Only 3 are listed among them, right? So, how many more does Florida have? Columbus does not have money. Ohio does not have money. Florida has 97 and Ohio has 7. 90 more by percentage. Okay. 1,200% more. What about millionaires? $236 million more. You see that? And where those people aggregate is the question. If you move to Polk County like all the other broke people, you're never going to make it. If you're moving for affordability, you're going to stay there and you're going to stay broke. If you want to make money, you need to make a challenge. They say when you move to Miami, you ever sink or swim. Okay. If you're taking care of business, you need to take the risk. It is incredibly hard for me to move here. I had to cash in everything I own, and I'm still, look at where I'm at. I love it. I'm next to billion-dollar developments, residential developments. I'm next to people that moved here for the same reason. I'm next to people that work in high-rise towers down here. I minded my own business, and I'm trying to grow my network. I struggle with this too, but you need to take advantage of the economics of your marketplace. I recently had a friend who was starting a cleaning business. She's a female-owned Latina, and I'm going to take her to the Chamber of Commerce and try to connect her with who? Women-owned business that sold and exited a billion over business over $10 million. Okay, that's very difficult. Women are very underrepresented. How many females have sold businesses over 10 million per? They're probably not going to be out there. It's not going to be a lot. $13 million businesses in the US, 28% generating 1 million or more. Between 2002, female-owned firms grew 56% growth rate. What about minority and female? Black and African women. Where I'm from, it's Black-owned businesses, right? But down here in South Florida, we're all about Latina-owned business. This says Black and Latino women. They don't even know. ChatGPT doesn't even know the correct thing. It's Latina woman. That's crazy. I'm going to correct it so it doesn't call Latina as Latina. It's crazy. Latina women, exactly. It says you're absolutely right. Black and Latina women have secured 3.1 billion venture capital funding. Where are more dollars flowing for women-owned businesses? If I wanted to tell my friend where the most venture dollars are going right now, what industry is it? Is it AI? With all women teams receiving only 2% of funding, that's great to hear because there's venture funds run by women. Software and tech, healthcare, and consumer goods. Consumer-focused industries regarding AI is rapidly growing. The underrepresentation of women in AI and related tech suggests that female-founded AI startups may not yet be receiving funding. Would the dollars flow fast to that? Let's see how fast the dollars would flow. Dollars can flow fast to women-owned businesses in the right industry and narrative combo, especially when they tap into FemTech, women's health, health tech, fertility, hormone, menopause care, reproductive access. That's exactly what I just said. Deeply underserved and massive demand. Consumer brands, SaaS, tech-enabled, scalable women-led platform startups get attention, especially when solving real data points. So what I'm going to do, I own a business and I'm raising capital. I want an AI auto texting fund that texts and does voice, and that's going to be what she says. I'm going to be a software as a service. So for an AI for an AI voice and AI texting and AI chatbot CRM for B2B financial capital raising. If she did that, what would be the dollars flowed? I have a fund that I'm raising capital for that I need this. She needs the back end, obviously. But I can say she's in market research phase. I'm going to make this girl a millionaire. Imagine being around millionaires just for doing this. I know this is a real estate channel, guys, but we're also talking about that. You're in a prime spot. If she built a female-led AI voice text chatbot CRM for B2B capital raising, especially for financial services, you're lining up with a very fundable narrative. Here's what you can explain. VC dollars, B2B SaaS, enterprise AI automation remains a top VC target. VCs love B2B SaaS with recurring revenue potential, especially financial verticals. And mine's going to be an open-ended fund, which means her target customers is evergreen funds that continue to want to raise from individuals, accredited investors, right? Top AI CRM companies, Gong, Clary, and Drift have raised $100 million. VCs have dry powder for niche-focused CRMs that solve actual money workflows, fundraising, investor communications, and deal pipeline. VCs want to fund female-led AI partnerships. They just see fewer. Being in market research, it's not a blocker. Show you understand the customers. I'm on her board. I'm on her board of directors. And so you and her strategy, perfect. That adds even more weight to the story. With you on the board and already actively raising capital, she could say, we're building the first AI-powered CRM specifically designed for capital raisers, and we already have a real-world usage from a fundraising over $40 million over the next 3 years for an OZ fund. One of our board members is actively using the system in market. That kind of credibility and proximity to the problem makes it way more investable at the pre-seed and seed IPO, a one-page decker. And I believe she should target multi-fund capital raisers, FINRA brokers that are registered. Although I have to see the compliance of AI chatbots, I'm in Reg D filed funds. What is the financial analysis of this? I hope someone starts this business and does it faster than me. You guys just heard a $100 million business idea. A high value niche, real spending power, financial opportunity. Multiple fund capital raisers and FINRA registered brokers. Private equity and VC firms, real estate syndicators, placement agents, RIAs, Reg D fund managers like myself. That's me. I'm a Reg D fund manager. 34,000 funds, 30,000 FINRA brokers, $4 trillion in private capital raised under Reg D. Assuming 2 to 3 users per firm, 2,500 per license per year. The target annual market serves the addressable 10,000 SO 500K to 1 million ARR achievable with a lean sales team. What would that value the firm at once we have 10 or a large user base? If we can tap in, and what size are funds when they sell? You have to have an exit plan. I'm writing her business plan right now. You need to have an exit plan if you're going to do it. Assuming valuation. So when do these types of firms exit? Seed, early revenue. You want to exit early, trust me, at that 10x phase. On if you can get to 500 to 1 million at a 5 to 10 mil, you exit. Scale up period. If you dominate your niche, become the go-to CRM for fund managers, your strategic could be 20x. So what are the valuations? Most acquisitions for syndicator, look at build.com, and they got to unicorn and provided financial growth. Use their business model to replicate it in this industry and absorb that horizontal. So what Build Technologies did, they're a FinTech building company. They didn't do anything but build a platform for developers. Analyzing traditionally offers valuable insight by AI-driven, tailored to B2B financial capital raising. Established in 2000, rapidly became a leading online home improvement retailer. Oh, I'm thinking of Built.com. That was the wrong thing. They did it without opening stuff. Built Technologies. They had $1 billion exit, and they laid off a lot of employees. Addressing Built's approach, developed a centralized to streamline construction loan management, created an AI-driven CRM tailored to B2B financial capital raise, focusing on unique challenges faced by fund application. Whose is a better model and larger? I'm in real estate development, and I'm vertically integrated as a construction firm. Banks, private lenders, real estate developers. Let's keep the focus on Built. Build.com, yeah, it's the closest example. And there is a huge pain point for data aggregation. Imagine a marketing arm as well to run the Facebook ads and Google ads. That would be a separate venture. But that is what drives the funnel. And it's what you need to scale. You need clients. And people like me use advertising firms. So you need to be an AI advertising firm with that. All right. I'm writing her whole business plan. Let's see what they say. Full stack, full system vision, built inspired with an AI marketing arm, AI capital raise CRM, which is the core product modeled after Built, investor LP database, voice text, compliance safe, FINRA fund, AI marketing arm, top of funnel growth engine, a standalone but integrated venture, AI ad campaigns for GPs, Facebook, Google, LinkedIn ad, Instagram landing page funnel. We don't just manage your LP pipeline, we fill it. I love that tagline. What solves? Pay 10 to 30% of their raise to investor relation firms, outsource ad spenders. And most people are asking for 5% on an equity raise. This focuses on equity, not debt. On equity and debt. You can do both, but equity first. So think of the cost savings to have these and run the ads. Think of the cost savings. I'm working with a FINRA broker who wants 5%, or I have to spend 10K with an investment bank who also wants a percent. Maybe you can do it. If I'm raising 40 million for a fund that is for Midwest Residential Growth Fund 1, which is capital raising, for infill new construction, what would be the implications for me on a example fundraise? So we're talking about, this is Miami real estate, guys, and the markets that we're in. I know it's kind of a mixed bag, but what would be the implications for me on an example fundraise? 40 million on the equity placement. and an investment bank versus using an agency who takes 10% of ad spend as a management fee and uses the platform as well on either a monthly or yearly basis. Let's see what it says. You're laying out a real and massive financial delta between the traditional capital raising system, FINRA brokers, investment banks, and AI-enabled ad-driven platform-based approach, especially for a $40 million raise. Let's run the math. And this is on me. And let's say I'm on her board of directors. 40 million for Midwest Residential Growth Fund, traditional. If a FINRA broker places it, it's going to put me in the whole 2 million. May require upfront retainers. Option B, investment rank, 800 to 2 million. Right? Platform model using an ad agency and AI CRM stack, $250,000, right? Agency fee of 10%, 25 grand. And the CRM, if 250,000 in ads results in 300 LP leads and you close 80 to 10 at a $400,000 average check, that's 32 million. Total ads is $250,000, 25,000 in agency, 12K on the platform, $287,000. There you go. Implications, cost savings of up to 1.7 million. That CRM and agency driven can be reused on fund 2 and 3, or even for other ones. Control and compliance. We have a large group. Data compounding leads to your universe forever. You can build your GP brand directly with your audience. Yes, I want you to draft a full pitch deck for top to bottom what we talked about. Because I replied to an AI ad, but they only did text on Instagram. It's a very poorly designed funnel. It needs to follow more like conversion code and 21 touches in 10 days. And the goal is to book a call automated. So the system is self-aware and self-growing. God, this is insane. I'm going to have to talk to my brother. Let's write it. And we're gonna write how much her raise is gonna be. She needs to set up. I just wrote her whole business plan. See, ChatGPT can't even think, it's so slow. But you're building a machine, not just a tool. Full pitch deck. This is an AI capital raising CRM and growth engine, right? And maybe it has a marketing arm too, but I'll have to ask it. In my experience, it's good to separate it. Like she could own the advertising agency and what actually people like a software as a service. They don't want to invest in both. Rebuilding capital raising from the ground up. AI CRM marketing stack for funds, syndicators, and FINRA. Brokers charge 5%. Here's the problem. Raising capital is broken. Investment banks want retainers. Marketers run underperforming ads. Fund managers don't know their pipeline. Not just that, but fundraising sales teams cost $200K per capital raiser on a 10 to 20 million annual raise. This is built for small teams or to consolidate funds 1 million to 50 million. People like me, growth funds, venture funds. That's another value add. This is unbelievable. You need 200K a year for a capital raiser. So add that. A lot of firms try all of it. And those people want percentages too. It's cheaper to bring them in-house, but it's not guaranteed, and they are very limited in terms of reach outs. Think of how many people an ad team can run. Should we incorporate an AI ad funnel as well? Or are advertisers going to need to be people? I think you'll need that, but I think the ad portion is a strong onboarding. So it maybe should be a separate entity that can be spun off later, but is included in the initial raise. Let's see what this says. This is unbelievable. Got it. That's powerful and adds even more. Here's how you do it. There you go. Meanwhile, brokers on commissions, IRA firms, in-house hires who still want a percentage of it. They're expensive. Their reach is limited. They don't scale. The whole point is the AI ad machine is an onboarding funnel. Run paid traffic to fund landing pages, warm up with AI generated text, voice, and content, and emails and workflows, self books, investor calls, which is exactly what I need. Collects preferences, tags LPs by interest. The ad funnel doesn't just fill it, it trains it. But it's a launch. It onboards your first 1,000. We can now break the raise into a core platform, develop and growth engine capital, and pitch it as a 2-in-1, and pitch it as 2 exits. Exit the advertising firm and sell it, and sell the platform. So we need to structure 2 from the beginning. One is a client of the other. Put the average exit of marketing agencies and AI-based SaaS platforms separately to show the exit plan and time frame. I want the entire deck with everything and what we would need to raise to develop the platform and how much we should give away. All right. This is going to be her whole business plan. This is why I'm so smart. I probably could run a venture firm, but I'm sticking to real estate because it's worth way more. You're building a dual engine business with 2 clear exits for early stage investors because it's both, right? You're growing. You can run your own ads. Vision and problem. Let's see what it says. I want to see the text outline of everything as lengthy as possible that would pass a Harvard level VC firm pitch. Dual entity capital raising platform, AI ad engine. Capital reimagined, AI-driven fundraising platform and ad growth. Dual exit powering the next $1 trillion in private market. Wow, that's powerful. The dual exit venture powering the next $1 trillion in private market raises. Presented by, it'll be her name because it's a female-owned business, right? We are building the first dual entity capital raising ecosystem for private fund managers, real estate developers, and financial professionals, consisting of an AI-powered CRM and investor engagement platform powered by Reg D funds, equity raisers, and broker-dealer workflows, and an AI-enhanced advertising agency that generates investor leads through paid media campaigns, right? Ad problem statement. Raising capital is broken. IR firms, 2 to 5%. Investment banks, raising 40 million can cost 1.5 to 2.5 million and take months of manual outreach, lost leads, and compliance. Platform, ad agent, sister agency, 21 touches, combined results, self-growing, self-optimizing capital raising funnel, right? Machine learning. Make sure to add machine learning to it as well as the target exit or IPO. We want a fast exit in 3 years or less on the hot AI train. Look at AI dollar deal flow, AI-driven VC investment. Watch this. What percent 4 large deals, right? VC-backed company raised 62 billion. AI-driven deals are over 60% of those. You need an AI component. Investment in artificial intelligence continued. So does software as a service. So does female-owned. While dollar volumes, this demonstrates lack of liquidity affecting both deal M&A, IPO, mega rounds, sectors. 6 of the top 10. Investment by sector: business services, consumer goods, industrials, IT, health and life sciences. So I need to paste this and I need it in my model. I'm going to say, and please make sure to use these stats for recent fundraising, how this venture outlines the current market economics and deal flow. Guys, make sure you go to the right markets. I'm in real estate. Understood. To align with current AI investment climate, I've updated it. Below is a comprehensive deck. Let's look. AI-powered market opportunity, business model, CRM platform, tiered pricing, 500 to 1,000, which includes advertising. Could this take the market from Salesforce? How many of Salesforce clients would switch? Let's see. Why would they switch without specific data? So we want on your sales team, add that we want Salesforce prior executive on the sales team so we can poach clients from the largest, or look for key hires with that have high sales numbers to onboard. I think we can take their market. Update this all over on the fund pitch deck with initial raise questions. And don't forget, we are female owned and minority owned business. And we will get the certifications for this venture as well. You need to get the certifications and work with the small business. Gosh, I'm going to have to send her to the small business thing too. This is also youth investor too. And the owner is less than the age of 25, which is even more, and a non-college grad. And first generation, Miami or United States citizen. Are you first generation? Are your parents, did they move here or they were born here? First generation United States citizen whose parents emigrated from where? Oh, so they were United States citizens? Okay. One moved from Puerto Rico. It also mentions, it can also outline where to incorporate the business. I'm not sure if it should be Delaware, if she's a fund setup and Reg D filed, or in Puerto Rico or Florida. If you can recommend at a Harvard level cap or lawyer structure, what would attract the most dollars? I think she needs to be set up as a Reg D filed fund/business. Let's see what it says. All right, this is our final version. Capital Reimagined, AI-driven fundraising platform and ad growth. A dual exit venture powering the next 1 trillion in private capital raising, private market raises. We are building the first dual engine, AI. Private market fundraising is stuck in analog workflows and fractured systems. This is a problem that I had, and I'm on our board. LP acquisition remains inefficient. Our platforms, with female-owned, minority-owned venture led by a first-generation U.S. citizen under 25-year-old with no college degree whose parents emigrated from Puerto Rico. We're obtaining official certification to expand access to capital and institutional level mandates. We are currently evaluating the most strategic legal structure. Delaware C Corp, Florida LLC and C Corp to fund, or Puerto Rico for export service tax incentives under Act 60, which U.S. compliant Reg D offering structure. We will consult with Harvard level securities and tax attorneys to structure the entity to maximize it. Problem statement. Yeah, so keep all the content. I need the full one so I can copy paste. And I like saying who we will talk to, but I need you to make determinations. This is a pitch deck, so we need to have a leaning towards for everything. Let me see it, including the sales team. Let's check it out. Pitch deck outline, capital reinvestment. We need the full thing. We are building the first dual capital raising. Private market stacks are broken. IR firms in-house. We're talking about it. Solution, ad engine, sister agency, combined growth. I need the full deck, all parts of it, start to, like I could do my pitch today. So how much would you be asking for? You don't see that here. What's the ask, right? Where's the AUM or where's the ARR, the target market? You know, I need all the details, including built.com, showing the exit targets and when, fast exit and early exit, outline the similarities to deal and VC where the dollars are flowing. Now, I'll be an early level investor in this too, but I'm on the board, but I am not. I own stock, right? And it has to be. Let's see here. Cover slide, executive summary, problem statement, AI CRM, AI ad engine, marketing opportunity, raised through Reg D filings, 300 registered capital, built, raised 200 and has 1.5 by streamlining real estates. So we're talking about real estate. Yep. CRM, it talks about ad spends, optional that, cross-sell. It's a cross-sell. God, this is so well written. Go to market, start with board members, that, proof of concept, they already have it. Roll out to 100 GPs, forecast 200 CRMs within year one after it's designed. Year three, projected valuations, combined 3-year exit, 60 million to 100 million. Exit strategy, acquisition by a FinTech, Salesforce, right? Or Black Firm agency exit, target exit timeline 3 years or less, IPO option, use of funds, $2.5 million seed, 20% post-money valuation of $12.5 million. Under 25, active GP, vertically integrated developer, pilot fund client, and capital advisor. And you should see the rest of her board because of my network. CTO, machine learning and enterprise software as a service, ad director, sales lead, ex-Salesforce executive, target hire to scale and convert enterprise accounts. There you go. Capital raising deserves AI. This is how we do it. And yep, there you go. So that's our entire business plan written in 2 seconds. Now that's as big as it gets. So we're going to put that here. You guys can also copy this business plan. It's right here. I'm going to add one more slide though. I need to say, because I would love to test these other platforms too. So we're going to say, from all articles you can find, is there anyone who has this out there? Or what are the closest, and what year were they founded? And what is our differentiators? I think Board would be one of them. I used built.com and other CRMs for construction as well, including PlanHub and other recent ones. PlanHub is the best still. But capital remains the largest problem for growth for not just businesses, in all sectors, but in real estate and ground up development. I am a licensed general contractor. Let's see what it says. So I want to include that. And if there are anyone in the VC space addressing capital raising and AI and marketing yet, with AI voice and AI text. So add all of this to the pitch deck. I need to go to target. I need to have a target VC fund we want to get accepted into. Only the best with the most exits and most AI driven investments first. And we need the list of all of those in the slide deck so we can attract early development. We want strong growth. I need any AI firms. I would also mention AI voice and AI text are also two more auxiliary businesses, or that can be rolled up into ours. Ours is a much larger market. So we're talking about roll-ups. Would an AI voice company buy me and get rolled up? No, maybe. But this is to effectively target strong track record. Sequoia Capital, California, Anderson's, Menlo Park as well. These are your target funds, right? Intel Capital, Santa Clara, Venture Partners, Greylock, Playground, auxiliary businesses. So add this all in the pitch deck and make it an 10 out of 10 so we could secure our funding first pitch. Think of any potential question and make sure it's integrated for a pitch for our seed round to develop the platform. This is why you go to accelerator days. Like you could go, you have to draw attention to these too, right? Revolution capitalizing seed round pitch presented by blank team, backed by industry. That's me, and board with real estate tech and capital markets experience. Capital is the number one growth bottleneck for real estate developers and construction firms. Expensive, 300 billion capital raising system. Real estate alone is 1.7. Our CRM, I thought you said it was 4 trillion. I make sure you include FINRA capital raises and investment bank capital raises, all and the number of funds in the US and breakouts by fund size. The market slide might need to be a few. It needs to be very exhaustive. This is her whole business plan. And this is because I need this. I'm writing this because I need it. Why not just let someone else run the business? So add all this to the right and show the exit volume and growth rate and how we do it and when we exit. All on the right, add it. There's a lot of these platforms that you use in real estate. I've been using them for 10 years. And the biggest problem now, I'm 10 years in and I'm addressing the biggest part of the market. I'm in new construction, right? We didn't even talk about home building and other stuff. Let's see here. 4 trillion, 1.7 in annual real estate construction starts, 6 billion in FINRA broker dealer revenues, 33 trillion in US investment, 1.7 billion in the real estate sides alone, which is much larger. Real estate is bigger. Real estate capital raises, in my opinion, can you also separate real estate capital raises, total volume, and the breakouts by existing and ground up construction in all asset classes versus VC investment and all other investments? I would guess investment into real estate is more than all industries combined. But we need to show that. It's still right in slides. Maybe. Approximately 4 trillion in annual capital raising. Real estate capital raises. Transactions 600 billion, 47% decline. This downturn attributed to higher interest rates and reduced office properties. Existing properties ground up, while exact figures are not specified, 170 billion. Real estate versus venture capital. Even with the recent downturns, the volume raised by real estate sector significantly exceeds that of venture capital. This underscores the substantial role real estate plays in U.S. capital markets. That's right. And all these guys are real estate. Addressable market. The substantial capital flow within the real estate sector highlights a significant opportunity for AI-driven by streamlining it. This updates it. Yes, add all of this to the right and make this at the highest level pitch deck that would get from the largest firms. I need it perfect. That Sequoia Capital would like. Make sure to put that on our slides. The AI firms we are targeting. You could do a pitch deck with this in 1 second. I can do her pitch deck, right? She's got to learn this and study it, which is why I'm putting so much information in it. She has to absorb this. She started right here. We're in Miami, Florida. I'm not from Miami though. But there's a lot of venture firms here. There's a lot of capital raising. We are in a financial market, right? Okay. The problem. Annual real estate construction starts. Real estate GP fundraisers integrated. Real estate all asset classes. Existing properties ground up. It's smaller but high margin segment. Conclusion. Real estate investment dwarfs all VC. 8,000 funds, 6 trillion in equity fund assets, capital raise mechanisms, broker dealer investment Reg D, direct GPLP. VC exit volume, 71 billion in VC backed, an AI-powered CRM. Built licensed GC founder AI built.com, combined for capital raisers, seed round capital, real estate experts, expansive VC. So we're starting with focusing on real estate because it's larger. That's really smart. Phase 1, real estate and fund managers. Those are Reg D, multi-starts. And so performance, $4.99 a month, which is nothing, and 1% of the fee raised. Premium tools, AI bullet text document, AI marketing. Traction, Plan Hub, shows how they use it. I've used all of these. Competitor landscape, HubSpot, Plan Hub, our platform. Top firms investing in AI, heavy AI. Sequoia Capital. Can you put the millions invested in AI and breakdown by those target VC firms so you can see the data, and also add Salesforce and other sales and CRM as market people? We can take clients. I'm sure existing platforms have been slow to adapt to AI, especially real estate. I do advisor calls for FinTech companies or financial related to building and CRM. I get paid by advisor groups right now. That's how tech driven my construction and development and fund is. I do consulting calls for my knowledge. I need the data more concrete. Annual investments, average over the past 3 years and over the past 2 years, and percent and volume into AI-driven SaaS companies and AI overall for these firms. I want to see why they should be the firms to invest. Sequoia Capital, OpenAI, and XAI, notable AI investments. Notion, Anderson's, 42 billion in assets, 6 billion. OpenAI, Databricks. Databricks is really fast growing too, establishing that. OpenAI, Analog, Curie Health, Global Ventures, overview. What about annual dollars placed on average, not just assets under management? And also number of AI exits, if there have been any, but I don't think there have because it's so new. We want to, or could be, rolled up into another AI company as well, which is why we want to target these firms. And if you can do a chart as well as the breakouts and update everything to the right. Let's see here. I need all the data for assets under management and give weight to those firms who are heavily invested and have been very active in AI equity placement into AI companies. update everything to the right, and please make to the right. Also mention the plan to allocate dollars to Alpha Sense and other groups for research. We would be a client to industry experts. That's what I do to get deep insight and continue to optimize deal flow until we hit a large enough fundraising round or valuation. I talk to those companies all the time. They call me about waste hauling CRMs and SaaS, Plan Hub. I have done more than 10 to 15 calls with groups in New York and California. And I'm a specialist with my knowledge. I'm on the board. My name is Rob Ellis, and development and construction is my general contracting and development firm. And my fund is called Midwest Residential Growth Fund 1 for building infill housing at affordable price points in urban core centers in tier 1 and tier 2 cities, with a heavy leaning on OZ. Let's see what they say. It's going to update everything, and I'll have my pitch deck. This is what I'm going to give my friend, and I'll use it with her. Seed pitch round. And no, the presentation will be by my friend. She is the female Latina founder, and I am just a early investor and on the board of directors. I will not be listed on this presentation, but as a facilitator, mentor, etc., I will be heavily involved, but it needs to be authentic and be hers. It's only because of my real world experience, but this is meant for that. Also, make sure to target female driven VC firms and minority owned, but I think AI firms are stronger. So secondary targets for continued capital raising is those firms. Make this as detailed as possible, so it would be a 10 out of 10 level. All right, this is what I love doing, guys, studying business and making business plans. Midwest. There you go. That's not bad. Presented by, and it'll say Rob Ellis, Pink Development, sport level expertise in real estate, fintech, capital markets, and AI sales. And there you go. Problem, capital. Capital is the #1 bottleneck for real estate and construction firms. There you go. Disorganized, expensive, low conversion rates. Also, just network, right? I didn't know anybody. I came from the Midwest. If I didn't move to a capital market, how would I have found that money? You know? This talks about the capital opportunity. Capital is the #1 growth bottleneck for real estate. Opportunity, 4 trillion US capital market ecosystems. Opportunity, capital raise ventures. You see the capital Conclusion, real estate investment dwarfs all VC, even in a down market. That's incredibly true. Investment funds, mutual equity funds, capital raising, VC volume, roll-up potential. Our AI-powered this, differentiators, founded and led by a female Latina entrepreneur. That's great. Real estate developers and fund managers, capital raisers, GC, $499 a month plus that. Advisory calls, targets, Sequoia Capital, AI equity placed, address, and wow, billions. Wow, that's insane. Primary target, secondary top tier women and minority focused funds. AI-powered fundraising stack, voice and text AI rolled up as auxiliary tools built for led by diverse operators, backed by actionable research and alpha sense and advisor networks. 4 trillion our wedges real estate. Our runway is unlimited. Exit strategy, add a stat about real estate, public and private, including land being worth more than all businesses and enterprise and all by trillions. Make sure to put that. And this addresses AI and real estate. Wow, this is incredible. And then make sure to also add in details on the AUM, fundraising, exit plan, etc. So it's a clear full cycle business plan with rollout. Expand on the slides to the right and lengthen if you have to. Okay, so this is a full business plan. And she added me as an advisor, which is great. Title, fund. You'd have to come up with a name, revolutionizing mission, team, Midwest. My fund that would use this is called Midwest Residential Growth Fund. I'll be a presenter too, but I'll have slides that relate. You can put Latina founder or me for each slide, but she should have more. That fund is an example of the customer. This business doesn't have a name. Can you update everything to the right and give me 5 names of what this is? Maybe AI raise? What do you think? So because they're so integrated, I can present and some of these details, stats, the global real estate is over 300 and the most valuable asset class on earth, exceeding all global equities and debt securities. All global equities and debt. That's the whole point, right? Don't forget global utilization for fast growing markets. So the growth is a global market since it's a SaaS, FinTech, and AI company. And make sure to put the name on slide 1. Do you like AI raise? Or put the possible names in a slide. Since this is a very early draft. Put the 5 possible names on the first slide. People like AI and people like SaaS. That's the business plan. And make sure to look at full exit. Over 100 million is target and a 10x exit. We're targeting a 10x exit. You have to come in. I've looked at capital raising ecosystem. It can't touch real estate. Can't touch it. I try to tell my friend that all the time. It doesn't matter how much money you raise, it will never touch real estate. Pitch, AI raise, working name, AI-driven capital raising and CRM platform for real estate development. Midwest Growth Fund, capital formation, technology, equity, and inclusion, led by female, working name options, AI raise, Fund Flow AI, RaiseWise, Vertical AI, Capstream.ai. Capital is the #1 growth. It talks about the issues, trillion, SaaS, FinTech, scale, and global applicability. Capital raised. Is that capital raised USA or global? Can you update both so it's broken out and put the full slide deck so I can copy paste? This is the final revisions. So this is what she's working on. I guess it's what I'm working on, but let's look at it. Make sure to put capital raising platform for VC firms too. We are pitching VC firms. We can't exclude them. Although it's a secondary customer, you can't downplay it. It needs to be treated like an equal portion of the market. That is collateralized versus uncollateralized. Equities. Make sure to break out the total value. It says, I thought, for real estate and equities by world and by USA. This is a USA based pitch deck. Okay, let's see what they say. So that's the last thing, but there are a lot of funds. We're in one of the biggest tech founded things out there. And I'm sure someone will take this idea, but that's fine. I came up with it on a Saturday in 1 hour. Let's see here. Global public equities, US real estate, US public, US real estate asset value. Add government, real estate, and land as well. That should bump it. All real estate and all business. The gap is large. The gap is much larger. And you can also add one more thing, which is enterprise valuation. How much of a business's valuation is based on its real estate? You can strip that out of this as well. You can see that the US is only 10% of the, or we could be a little bit. Total capital raise, global US public equities. And last question. if you did a separate comment about enterprises and their valuation backed by real estate or given by their real estate, and you took that out of the equity valuation of their business, would that modify it? Could you do that on another slide? Basically stripping a business down from its value that is non-real estate versus real estate. Use large public companies as an example, like even the home building companies, McDonald's, basically businesses that are 25 billion and up. How much is held in value in real estate? And if you take it out, how much the enterprise value changes, and the gap between real estate and equities, if you can, that would really help this strengthen the argument. This is what I've been arguing for a long time. I used to raise money for businesses, and it's much harder than raising money for real estate. Let's see if we strip out a business. If I take your assets, which is your how much of enterprise value is backed by it? McDonald's owns 40 billion in real estate. Walmart, 400 billion, it owns $1 billion in real estate. Amazon, 1.9 trillion, owns 100 billion. Home builders, real estate land holdings drives the majority. Insight: if we strip out real estate holdings from public enterprise value, a significant portion of equity market cap is indirectly tied to land and property assets. True uncollateralized value of many companies would drop 10 to 30% depending on their balance. Conclusion: the gap between real estate equity is even larger than reported. Real estate remains the foundation collateral asset class for both corporate finance and long-term value. That's exactly right. That's the whole point of the slide. Update everything on the slide deck so I can copy paste and have it ready to go. This is amazing. So guys, this is I moved to Miami. I'm raising capital. I'm a voice on LinkedIn. I'm in a lot of these spheres. If you look at where people, I don't think it was updated. All slides. I only see 3. Do it on the right. I think it's missing one of the slides, which was a typical capital raise. I thought it was 20 pages or more in the slides. Show all the slides you had from before and also add a slide about the example of my fund raising 40 million in equity, how the fee structures would be different after the capital raise slide. So yeah, that's great. Let's see. Problem: raising money, opportunities, sector comparison. For typical capital raise, Example, transitional, placement agent, 2 million, legal and admin with AI raise 6K a year. Results, save that. Don't. It was way longer before. Can you add all the other slides back? There you go. It was missing the AI tech. You see, ChatGPT starts to forget a lot. What the heck, dude? We had way more than that. We had way more. What happened? You had up to 17 slides before. This needs to be a full pitch deck that would pass at the Harvard level and raise capital guaranteed and is fully exhaustive. That is good enough to speak for up to 1 hour. We'll say 30 minutes, including pure sector analysis, etc. Other alternatives. Add all the slides back and that you did and get this to a 10 out of 10 pitch deck level that will raise capital for our seed round and how much the ask is guaranteed and how the funds will be used. Do it all to the right. See, why does it, I can't copy paste this. Please make sure to imagine getting handed this business. This is way bigger. Now, it's never going to be bigger than real estate. Don't forget. That's why I don't need it because I'm going to use it. It's a tool I need, but it'll never be bigger than real estate. Just don't forget that, guys. For the AI raise, don't forget the advertising side and the percentage of ad spend on the typical model, which is 10% of funds, and the LP close rates. Make sure to add that back in. Maybe it's a 2-page slide example. That was very powerful. How it would cost me for a investment bank, equity placement, FINRA versus the fourth option, which is the 2-in-1 fund or 2-in-1 advertising and AI raise and chatbot and voice. Took out all the details. I need all of the details. Don't summarize it. Make this as much data driven and statistics and math as you can. Very quantitative heavy as much as possible and as long as possible. Don't leave out any details. We did all that and then it took it all out. Much better. To do this in 2 parts. It exceeded the max length. Can you do it in any other way? I needed all that data and this has taken me more than 2 hours. I'm ready for part 2. Remember, we have 17 slides and make this as data driven as you can. What's going on? It's so much data. We'll just keep pasting it in. I'm using it so heavy. It can't even load. That's kind of what you have to do. You have to put them in here as they come. Like you see how this has way more. And then, oh, there we go. That's a lot better. God, this is so detailed. 112, go-to market strategy. And slide 16 and later. Okay, I think I was at go-to market strategy. Oh, here we go. Validation. Vision statement. Okay, not bad. Something like that. I'm sure it's off. This is probably longer than any message I could ever. You can do the quick overview. I think you need the long run. So that's everything, guys. Definitely need something like that. Thanks for watching. Miami channel. This is a pretty long video.